Shall we start the session today? What we are going to do is we are going to cover up the standard costing. Uh, Basically, we hope that to spend two sessions, even though there are three sessions. We'll see how far we can cover today. Uh, so we have, first of all, learning objectives or outcome research, the session objectives. At the end of these sessions, we are talking about the standard cost and the standard costing, explaining the costing, standard cost and standard costing, operations of a standard costing system. And also we compare and contrast standard costing with budgeting. We will be talking about advantages or disadvantages of standard costing and the types of standards. Prepare standard cost card for goods and services and performance variance analysis, perform variance analysis, and also calculate, interpret different, variances, maybe price, material price variance, material usage variance, mix variance, yield variance. Then we calculate the labor related variances, of course, labor cost variance, rate variance, efficiency variance, mix variance, yield variance. Then we will be calculating total variable overheads and the variable overhead efficiency variance and also fixed overheads. And calculate, interpret total sales related, income related variances and identify labor, material and overhead sales margin variance. That is real income side, sales side, turnover side. And prepare operating statements and explain cost control and cost reduction. So you see that the scope of the session is little bit, I would say it's more, there are more areas for us to do calculations. So thereby it's basically, calculation oriented session. Even though first part is little bit, theory. There are various ways of defining standard or standard cost. Different authors, different people, really academic researchers have defined the standard cost differently. If you look at the CIMA official terminology 2015, it says the planned unit cost of products, components produced in a period. So basically, it talks about the planned unit. It's the thereby it's the target. So thereby, it's related to the components or a product produced in a period. So thereby, basically, it is tackling with a unit cost. If you look at the Dury, of course, 2018 is the book, the recent edition. It says that predetermined costs that are target cost, they are target cost, and that should be incurred under efficient operating conditions. So what is important is in the second definition, when you say standard cost, we will be developing standard cost or the targets or the predetermined cost, assuming that we are going to operate, our business is going to operate, the factory is going to operate, or example, material is going to be used, labor is going to be used, production overheads, resources going to be used in a efficient operating conditions. So normal condition. So thereby we develop the standards under the efficient condition. No strike, for example. Machines normally works. Machines are working in a normal conditions. We have the technology related, no issues in technology, no fuel issues like now we are facing. So thereby, standard costs are basically, developed under efficient operating conditions. So I think you can understand what is efficient operating conditions. Now, if you get any, we can compare this predetermined cost with actuals. We can compare predetermined, of course, units or the usage with the actual usage. So you see that there will be a variance. If there is a variance, if it is an adverse variance, we call it unfavorable variance, then our operating system or the operating condition, factory condition, factory operations, production, which is taken place in your factory, not efficient. You got my point. So thereby, since we are preparing standards under the efficient operating, if you get a favorable one, that means unexpected things has really happened. Okay, standard costing is a control techniques which compare standard revenues with actual obtained variance, which are used in stimulate performance. When you say standard costing is the activity really we perform. Standard cost is a kind of, thing what we have, maybe predetermined cost, but standard costing is a kind of process where we apply, where we use to really control, where we use to, manage our operations, maybe factory operations, maybe particular department operation, maybe a particular section of the production department, maybe a particular workshop in a particular business. So thereby, standard costing is, of course, a control technique. Then operation of standard costing system, where we perform the standard costing activities, we have identified here 4 areas. I think it's a matter of presenting. You can discuss this under 3 headings or 2 headings, 5 headings, 6 headings. It's not a problem. But here we have presented in our slide presentation, that is in a four kind of, 4 steps. One is the you should have the standards first. Calculating standard costing, you should know the standard cost of a particular product. When you say standard cost of a particular product, you may say that direct material is so much, direct labor is so much, and production overhead is so much. That's your standard costing card or cost system. So you should have a standard. Then since you have the standards, you can really get the actual performance with the standards. Since you have the actuals, of course, so you can compare the actuals with the standards. Say you produce 2000, then if you know the 1 unit cost, of course you can convert this 2000 cost incurred, unit production cost incurred with the standard cost of 2000. So analyzing and reporting variances arising. So you may have variance, so you can analyze it further and further into sub-segment. Thereby, we can identify the root cause, major variations. We call it management by exception. The root cause for inefficient operation of our business. Then investigate significant variance and take in appropriate actions. We can take either to change the standards, or either to improve the factory conditions, either to improve the technology, either to train people. So we can take appropriate action to change, even to change the layout, even to change suppliers. To if it is a quality matter, we can change the suppliers. I think these are the steps. Basically, you have the standard cost, actual, comparison, identify variance and analyzing and taking corrective action. That's the operational or the operation of standard costing system. Standard costing and budgeting. I think you can remember. I hope that you can remember. We discussed budgeting last week. So we talk about the functional budgets, master budgets, cash budgets, etc. So, budget is a kind of, estimates for 1 year period or maybe 1 month period, 2 month period, 3 months. That's okay, the budget. And if you have the budget, really standard costing system or standard costing, it's very easy for you to prepare the budgets. Then you can generate budgeted information. So based on the standard cost information, you may prepare the budget for 1,000 units. 1,000 units, the budget units. For 1,000 units, you prepare the budgets. You know material, you know the material requirement, you know the labor cost, you know the production overhead cost, you know the other administration and selling distribution cost, etc. You know how much to be paid as tax. So all these matters are very clear, but it's estimate the budget. But we know that even though we have the budget, the actual situation is different from what we expect. So thereby, you may produce 8,000 units, 800 units as per in our example. Now, what we have to do is, we have the standard cost sheets and we have the budgeted information and we have the actual, but actual is 800 units. But now you see these two documents cannot be compared. Why? Because this is in 1,000 units, this is for 8,000 units. So you consume resources, the budgeted information consume resources for 10,000 units, but actual resource consumption is not for 1,000 units, it is for 800 units. So thereby, we need to convert this fixed budget we have prepared already so as to match with the actual. So that's called the flexible budget or the flex budget. So fixed budget 1,000, then we convert into flexible budget. Then of course we can compare. You may have different data, direct material, direct labor, whatever the resources you consume, you have under fixed budget, and actually consume resources you have, you can get the variances. So variances, of course, budgeted volume variance you can get, variances due to many reasons, because there will be a budgeted volume variance and there will be budgeted expenditure variance. So the basically total budget variance consists of, you see, volume variance plus the budgeted expenditure variance. Is it clear? Okay. Then we have types of standard, basic standards. These are kept unaltered over a long period of time, maybe out of really date. Used to show changes in efficiency of performance over extended, time, and perhaps the least useful and least common type of standard. So this is really classic example is, I think you can remember the Colombo price index. Colombo පාරිභෝගික මිලදර්ශකය කියලා එකක් තිබ්බ ඉස්සර. ඒක ඇත්තටම ඈත අතීතයේ හදපු එකක්, භාණ්ඩ කීපයක් විතර ඇතුළේ. ඒතර රටේ තියෙන ඉන්ෆ්ලේෂන් එක, the particular index, price index, really was unable to reflect the prices of commodities. So thereby it was changed in 2006 or 7 somewhere else. Basic standard is very old, not updated. So it's there. Ideal standard based on the most favorable operating conditions, with no wastage, inefficiencies, no idle time, no breakdowns. Ideal. This is what ideal. Likely to have unfavorable motivational impact because employees feel that the standards are unattainable, therefore not realized. Now, for example, ideal time for us to start the lecture at 1 o'clock. That's the idea. But we know, due to many reasons, it will take some students to, get the connection. Voice matters, technical problems, lecturers, even lecturer will not really in a position to get connections on time. So thereby, lecture may really delay, little bit. In certain cases, maybe in certain cases, half an hour delay. So that is ideally to start one. So when ideal standards are given to employees, they are not ready. They think that it's not achievable. It's not reachable. So thereby less motivation. So thereby ideal standards are little bit, not popular among employees. Not popular, but ideal is the classic real situation, but it's not possible due to various environmental, reasons and behavioral factors. Then attainable standards means based on efficient operating conditions, but not perfect. Some allowances are made for wastage, inefficiencies, machine breakdown, etc. If well said, they provide useful psychological insight for this. Psychologically, the employees feel, it's achievable, reachable, something like that. The consents and cooperation of employee involved improving the required standard. So if you give the attainable standards, employees are really, if they actively participate, they will encourage, they motivate to really work on these standards and to achieve these standards. Current standards means, basically current wastage, current efficiency, updated standards. So basic standards, opposite one is current standard. Basic standard means you have really developed these standards about 20 years back and you continue. No updates. So which is outdated, which is not really, practical, because now business environment, so dynamic, business environments changing quickly. So thereby last year prepared standard cost information may not relevant for this year. Now, if you know that the bus fees of nowadays prices, quickly changing, going up. So likewise, when the environment is so dynamic, when there are issues in the economy, when there are issues in the society, when there are issues in a particular industry, basic standards are not applicable, because we don't get any business as fixed. So all the business environment so much dynamic. So opposite of basic standard is the current standards. Opposite is ideal standard is the attainable standards. I think I hope that you can understand the type of standards. Standard cost card. A standard cost card is to decide the standard cost of a product or activity. Standard cost card. It contains an itemization of standard amounts of material, labor, overhead required to create 1 unit of a product. Now, for example, in certain cases, if you really organize an event, say in the university or when you were in school, when you organize an event, really, you have to prepare a budget for the event. That is not for 1 unit. That is for the event. Suppose you are going for a trip. If you are going for a trip, say you will prepare a budget for the particular trip. So that is somewhat similar to the standard cost card. But that remember that there's a difference between the standard cost card and the budget which I gave, but it's much more similar to the standard cost, but it is for the whole batch, whole event or the total participants. But standard cost sheet is prepared for, one particular unit of production. But if it is a service-oriented organization, standard cost you may prepare a standard costing sheet based on your standard cost card information. Anyway, the card also multiples of standard costs, which is these line items to arrive at the total standard cost of the product. The card is used to achieve two main purposes: to derive the standard cost of a product, to serve as the basis of variance analysis with actual for the product's compliance. So you can use the standard cost card for different purposes. So you can, do the costing of a product. If you have the standard cost card, you can do the variance analysis. You can compare with the actual cost and the, variable cost. So you can do the pricing even. In certain organizations, when they, for pricing, they may use the standard costing. For example, I know when we work in audit firms, we do the standard costing to price. We have a standard rate for senior auditor, maybe partners level. We have a standard rate for manager. We have standard rate for senior trainees. We have standard rate for junior trainees. So it depends on the what is the standard what is the difference between standard and estimation? It's a good question. Estimation is much more similar to the standard, but we don't use the estimated cost or the total estimated cost concept, but we use the word standard cost. Standard cost means really we may do different estimates for different operations, different activities. Based on these estimates, we are trying to quantify. Based on these estimates, we are trying to quantify the resources requirement for one unit and the unit cost. Again, I would say there is a link between standard and estimates. Almost estimates we convert into a nice statement saying that standard cost. So when you do standard costing, you need the estimates. But you can't do estimate just arbitrarily. There should be a rational way of doing, estimates. Maybe work study. In a factory, you may do how long will it take to complete a particular t-shirt, labor hours requirement. So you have to do work study. It's a different subject. Work study will be carried out, different experts, different professionals, and they do the calculations. Like can you remember the quantity survey? When we are constructing a house or building, he is giving the the quantity. Bill of I can't remember the name. Quantity survey giving that this much of material, this much of cement, this much of the sand is required, and something like that. That is a kind of estimates. I would say almost estimates are similar to standard, but when you say standard, we use the term in accounting just to say one unit standard cost card. Okay. අපි දැන් මෙතන ඉංග්‍රීසියෙන් සිංහලුත් කියන්නේ කියලා දෙනවා. ඉතින් එතකොට ඇත්තටම අපි ස්ටෑන්ඩඩ් කොස්ටිං කියන්නේ ස්ටෑන්ඩඩ් කොස්ට් කියලා කියන්නේ ඉතින් කලින් තීරණය කරගත්ත පිරිවැය ඒකකයක් තමයි. කලින් අපි measure කරගන්නවා කලින් estimate කරගන්නවා පිරිවැය. ඒක පදනම් කරගෙන අපි ඒකකයක cost එක හදා ගන්නවා. ඒකකයක් හදන්න යන cost එක. මේක manufacturing setup එකට මුලින් ආවේ but you can apply it to සේවා ආයතන වලටත් මේක පාවිච්චි කරන්න පුළුවන් මේ standard cost කතාව. ඉතින් මේක අමාරු දෙයක් නෙමෙයි මේ estimate හදාගෙන calculation කරන්න තියෙන කාරණයක් බලමු අපි එතෙන්ට එන්න පුළුවන්. Okay. මේ තියෙන product standard cost card එකක් product alpha වලට number එක 250 ඒ කියන්නේ product එකේ number එක වෙන්න පුළුවන්. Direct material you see that they are taking two types of material A and material B. 5 kg at rupees 30 per unit. 3 kg rupees 25 per unit. And remember these all these are estimates. 5 kg can estimate 3 kg can estimate මේ ඔක්කොටම තමයි standard cost sheet කියලා කියන්නේ අපි technically. එතකොට 150 direct labor there are two labor grade 1 and grade 2 of course. 2 hours 50 per hour, 1.5 hours rupees 80 per hour. So manufacturing overheads 40 hours and 50 per hour. So this is the manufacturing overhead and totally you get 645 manufacturing costs. So when we produce 10,000 units, we can calculate the standard cost for 10,000. We can calculate the standard cost for manufacturing overheads. We can calculate the total standard cost for direct labor 1, labor 2, direct material B and direct material C. Okay. Then you see that here when you put 5 kg of this and 3 kg of this, you see that there is a mixture. Like, you know, when you produce concrete, or cement, you put sand and the cement. තාච්චි එකකට සිමෙන්ති තාච්චි එකට වැලි තාච්චි 5ක් 6ක් දාන්න පුළුවන්. That is 1 to 6. So එතකොට තාච්චි ඔක්කොම එතන තියෙනවා 7ක්. 7න් එකක් සිමෙන්ති 7න් 6ක් වැලි. එතකොට මෙතන material kg you add 8 kgs. 8 වලින් 5ක් you know material A 8 වලින් 3ක් එහෙම නැත්නම් 3 divided by 8 that portion that proportion is material B. Like labor also mixing. When you go certain teamwork, you see that there are different resources are really resource we mixed. So there are if there are more than one raw material, if there are more than one labor, you can calculate mix variance and the yield variance. Mix variance එකයි ඉපයීම් variance එකයි ඵලදා අපි එකට කියනවා ඵලදා variance කියලා. yield කියන්නේ ඵලදාව. එහෙම variance එකක් calculate කරන්න පුළුවන්. Okay. All right. Now ABC is planning to produce a new product of called Beta. It is expected to produce 5,000 units during the first year. Products require two types of materials called X and Y. The budgeted number of units required for X and Y, budgeted number of units required from X and Y, that is material. You see, from the material, of course, you need 15,000 x වලින් එතකොට 15,000 ඕන. එතකොට එකක් හදන්න කීයක්ද ඕනද x වලින්? අපි 5000නේ හදන්නේ. We are producing 5,000, but you need x of 15 units. එතකොට x වලින් ඕන ඇත්තටම අපිට කීයක්ද? 3 units. Why you need 20 units and you prepare only but 5,000, thereby y waliin we need how much? 4 units. The total budget cost of material x and y is 300,000 and 200,000. එතකොට අපි කරන්නේ මොකද්ද? මේක බෙදනවා 15. ඇයි x වලින් යුනිට් අවශ්‍යයිනේ 15,000. එතකොට cost එක 300,000 නම් 300,000 බෙදුවම 15 මං හිතන්නේ එතෙන්ට එන්නේ 10ක් 150යි 20ක්. එතකොට එක යුනිට් එකක් වෙනවා එක මැටීරියල් එකක් වෙනවා රුපියල් 20ක්. x වලින්. y වලින් you spend 200,000. එතකොට මැටීරියල් එතන යනවා 20000ක්. එතකොට මේක 20000ෙන් බෙදන්න ඕන කියන එක තමයි මම කියන්නේ. Is it clear? එතන මේක 20000ෙන් බෙදුවාම අපිට පේනවා ඇති උත්තරේ 10යි. එතකොට මෙතන එකක් 10 ගානේ තමයි අපි දෙන්නේ. නේද? My cursor is not moving. Yes. එකක් 10යි නේ. එතකොට මේක 10යි මේක sorry ඒක 10යි නේ. එතකොට මෙතන ඔබට පේනවා ඇති 30යි කීයද? බිංදුවයි දෙවරක් 3 6යි 60ක් වෙනවනේ. මෙතන 40ක් වෙනවා. That is the material cost. The material දාන්නේ කොහොමද? So the combination is 7. Mix. 7න් 3ක් x 7න් 4ක් y. That's the standard mix. දැන් standard mix එක උනාට actually ඔක වෙනස් වෙන්න පුළුවන් අපිට. දැන් ඔබට මතක ඇති gas සම්බන්ධයෙන් gas එකේ අර chemical දෙක මිශ්‍රණය වෙනස් කරාම උනදී. You can really change the material mix. දැන් අපි ගයක් හදනකොට උනත් සිමෙන්ති එකකට වැලි තාච්චි 6ක් දාන්න ඕනේ. ඒ කියන්නේ අපිට පුළුවන් සිමෙන්ති එකකට වැලි තාච්චි 7ක් දාන්න. So you are changing the mix. That's the practical situation. But standard is that the norm. Okay, right. Then labor also, I think you see that there are labor, 2 types of labor, grade 1 and grade 2 required for the production. Hourly rate type is one type is 60 and other type is 90. එක පැයකට රුපියල් 60යි රුපියල් 90යි. එතකොට අපිට තියෙනවා direct labor නේද? direct labor 1, direct labor 2. එහෙමනේ තියෙන්නේ. එතකොට පැය රේට් එක අපි ගාව තියෙනවා. පැය රේට් එක කීයද? පැය රේට් එක 60යි. රුපියල් 60යි. 1 වලින් නම්. ඊළඟට ඔබට පේනවා ඇති රුපියල් 60යි. ඔබට පේනවා ඇති eraser no. ඔබට පේනවා ඇති දැන් so it's not more. Yeah, okay. මෙතන ඇත්තටම රුපියල් 60යි නේද? රුපියල් 60යි. මෙතන ඇත්තටම 90යි. අපි දන්නේ එකකට hours කීයක් යනවද කියලා, but we know one labor hour rates grade 1 and grade 2. That is very clear. මේ රුපියල් නිසා මම මෙහෙම පොඩි මාක් රුපියල් කියන ලියන්නේ නැති නිසා එහෙම දෙකක් දානවා. Total budgeted number of hours 1 and 2 types are 12,500. එතකොට අපිට ඒකක 5000ක් හදන්න this 5,000 units of labor and 12,500 of units, 12,500 of grade 1 labor hours required. එතකොට එකක් හදන්න ඔබට පේනවා ඇති 2.5ක් යනවා hours. ඒක කොහොමද ගන්නෙ? 5000 12500 බෙදෙන 5000යි. නේද? 5000න් බෙදුවාම අපට එනවා 2.5. එතකොට 60 වැඩි කරනවා 2.5. Okay. මේක යනවා 7500ක්. එතකොට 5000 බෙදෙනවා 7500. එතන එනවා මං හිතන්නේ ඔබ මාත් එක්ක එකඟ වෙයි 1.5. එතකොට මෙතන 60ව දෙකකුයි භාගයකුයි 60ව දෙකක් 120යි 120යි 30යි 150යි. okay. මෙතන 91යි 90 භාගයක් 45යි 45යි 50යි 135ක් වගේනේ. If I am wrong, you tell me. Yes. That is about direct labor. Now remember, all these are estimates. As someone told us, what is the difference between estimates and standards? So we do a lot of estimates when preparing standard cost sheets. So standard estimates is part of activity you perform when preparing standard costing, right? The manufacturing overhead absorb the product base on labor hours. The total budgeted manufacturing overhead is, you see, 3,500. Now manufacturing hours is 305. So what is the production overhead absorption rate? Production overhead rates. How many hours? You see, for labor hour, you have to spend I think it's 4 labor hours. No? 4 labor hours is required to prepare the total. 4 labor hours is required. So we have to find out the rate. Now you see labor hour requirement. What is the labor hour rate? How do you find out the labor absorption rate with regard to the labor hour? So that, of course, you have to find out the manufacturing overheads. Then, since I don't have little time, space here, so we will just look at the. So you can remember how we calculate the X, Y, and direct labor 1, direct labor 2. So the total budgeted manufacturing overhead is 350,000. But what you can do is here, if you divide it by this, of course, what should be the cost? Unit cost. How much? It's 350 divided by 5,000. It's 7, no? 70 rupees. Here it is 70 rupees unit cost. So එතකොට 70000ෙන් බෙදුවාම අපට ගන්න පුළුවන් absorption rate එක. එතකොට මෙතන 1යි 3ක් ඉතිරි 30ට 4ක් 7 28යි මෙතන 0.5. එතකොට absorption rate එක පැයකට 17,750ක් තියෙනවා. 17,50. එතන මේ ටික එකතුව තමයි total standard cost එක වෙන්නේ. total standard cost එක වෙන්නේ 0.5යි right 10යි 15යි 18යි 25න් 5 දෙකක් ඉතිරි මං හිතන්නේ 455යි බලන්න හරිද කියලා 5යි 10යි 15යි 18යි 25න් 5 දෙකක්. Yes, the total standard cost is 450 455. If you want to calculate the budget, now if you can prepare the budget. How do you prepare the budget? You just multiply all these figures by 5,000. Make a 5,000 වැඩි කරනවා. මේකත් 5,000 වලින් වැඩි කරනවා. නේද? මේ හැම එකම 5,000 වලින් වැඩි කරාම you get the budget here, this slide. So that is the standard cost card information. I hope that we have the answer. This is the answer. This is standard cost is prepared for 5,000 units. But I know that since we discussed some factors, can you remember we discussed the circular reasoning and pricing flow when we discuss the pricing standards, pricing title or the pricing topic or pricing chapter, you can remember when you increase the number of units, your fixed cost, your manufacturing overhead may have fixed cost. So thereby this absorption rate may, reduce. So thereby remember, we have done this estimate for 5,000 units. 5,000 units. I think with that, so very simple. If you want to prepare the budget, you can prepare, as I told you, මේවා 5,000න් වැඩි කරන එක විතරයි තියෙන්නේ budget. මේ හැම එකම 5,000න් වැඩි කරන එක විතරයි තියෙන්නේ. මේක 5,000න් වැඩි කරන. 5,000න් වැඩි කරන එක තමයි තියෙන්නේ. I think you can do it. No need of explaining it. I'm just putting you just to understand this card. So this is the standard cost. So you can prepare a budget, right, for 5,000 units, and that will be your value. That is the value. Okay. I think you are clear what I'm telling. Suppose your actual production was not 5,000, 4,000. Your actual was not the 5,000, 4,000. Then this is the original budget you prepared, the fixed budget. You can prepare the flex budget, flexible budget. You can prepare the flexible budget. You can prepare the flexible budget if that is the case. Neither. A flexible budget again, FBA, flexible budget is not for 5,000, it is 4,000. Then you have direct material 2, labor 1, labor 2. How do you get it? You multiply the standard cost by 4,000. Then manufacturing overhead. Then your accounting system will provide you the actuals for 4,000. Suppose actual is again, as I told you, actual is 4,000. So we convert our budget into flexible. Then you might have the actuals data, actuals, Satya data. But actual data, as I told you, may not really, for example, may not be the same amount. So thereby direct material will be little bit more. I have put 2 here. I'm sorry, here. Direct material would be little bit more. Here I put 3 X's. Now I put, sorry, 3, and here I put 2. So here maybe 1. You know, direct material 2 is very low. Likewise, now you can compare this actual with the budget. So you get the variance. That is the logic. That is the logic. So I hope that you got it, and you can understand what I'm telling. Okay. Now variance analysis. Variance analysis. Comparing the actual figure with the standard figures and finding the reasons for off-standard performance includes an explanation of the variance as well as an evaluation as to why the variance has occurred. So you are trying to calculate the variance and try to find out the reason why such variances are there. So variance analysis we can use for different purposes. We can use it for controlling purpose. We can use it for evaluating performance, because standards, targets are given for our employees. And we can evaluate our employees or division or branch against those targets and standards. Then again, we can plan. We can take decision. So thereby, variance analysis help us to, manage our business operation, and it contribute for us to implement different management functions like controlling, performance evaluation, planning, and decision making. Okay. Then variance analysis could be either favorable or unfavorable. Maybe in certain cases, since it's a mathematical calculation, make a plus එකක් වෙනවා වගේම negative එකක් වෙනවා වගේම මේක 0 වෙන්න පුළුවන්. Your targets may equal to the actual, then the variance is 0. But we almost discussed favorable variance and unfavorable variances. But remember that there may be certain cases the variance is 0. Results are better than expected. Results are worse than expected. Unfavorable. Actual cost, standard cost. So actual cost is less and standard cost is more when you get variable favorable. Standards අපි හිතුවට වඩා වියදම අඩුවෙන් ගිහින් තියෙනවා. පිරිවැය අඩුවෙන් ගිහින්. ආදායම නම් අපි හිතුවට වඩා වැඩියෙන් ආදායම ඇවිල්ලා තියෙනවා. හිතුවට වඩා estimate කරාට වඩා. Normally අපි favorable කියන එක F අකුරෙන් සංකේතවත් කරනවා. F එක දැම්මම එකකින් අදහස් වෙන්නේ favorable කියලා. But some people may just keep it as it is, and unfavorable නම් අපි adverse කියලා දානවා, සමහරු u කියලා දානවා, සමහරු bracket එකක් දානවා, just like loss. To indicate the loss figure we put a bracket now. එතකොට bracket එකක් දානවා, ඕන එකක් දාන්න පුළුවන්. Worse, actual is more, standard cost is low, revenue is really low, standard revenue is more. That is the unfavorable condition. Then you have the profit variance. අපි හිතන ලාභය ඊළඟ අවුරුද්දේ අපට 25000ක් කියලා මිලියන. නමුත් අපට ආවේ මිලියන 24000. Actual profit 25 million was expected, and 24 million is the profit. So there is a variance, profit variance. So profit variance is, as you know, due to 2 reasons. One is production cost issue, the production cost variance, the manufacturing related cost variances, and other one is admin and distribution and selling cost variances, and the other one is sales variances. We call it total sales margin variance. Now the total selling distribution and total production variance. Of course, the total production cost variance we divide into total material variance. Material variance may be price variance, material usage variance, and also total direct wages variance, labor rate variance, labor efficiency variance, total variable overheads variance, expenditure variance, efficiency variance, total fixed overhead variance, total expenditure variance, volume variance, total sales margin variance, sales margin price variance, and sales margin volume variance. You see now technical words are they are coming. Basically, the material variance divided into two parts: the price variance and the what do you call usage variance. Purchasing department is responsible for price variance, not the factory manager, because factory manager is there to produce the item what he expect his material to be there in the factory when he need it. The responsibility of continuous supplying the raw material to the factory is with the responsibilities with the purchasing department. So purchasing department will really tackle the prices, registered suppliers, tender procedures, purchasing negotiations. So thereby pricing is not the responsibility of the production manager in a normal organization setup. But if production manager perform even pricing action or the pricing functions, or production management, the pricing department is one unit, then of course production manager is responsible for both price and the material variance, usage variance. But if that is the case, if production manager is or the factory manager is responsible for both material usage and price variance, then the internal control, management control system in that organization is weak. Division of labor is not there. Likewise, labor rate and labor efficiency variance you will have, and variable expenditure variable variance and the variable efficiency variance. You see that all labor related and variable overhead related variances, rate variance, expenditure efficiency variances are there. Fixed expenditure variance and fixed volume variance. We will see what are those. Right, cost variance. First of all, we will talk about the cost variance. Total direct material price cost variance, total direct labor cost variance, total variable overhead cost variance, and total fixed overhead cost variance. The four variances here, මෙන්න මේ හතර. නේද? අපි ගත්තොත් මෙන්න මේ හතර. We are going to now next slides we are focusing on this, and of course my mouse is not working well. Okay, yes, this one and this one and this one. So initially we will be focusing on these four, I think, in the next slides. Okay. Total direct material cost variance, price paid for the material and quantity material. So this variance is vary because of two factors, price matter and the usage matter. Because if you look at the standard cost card, you see we have a target to produce 1 unit of what do you call what happened? to produce 1 unit of, you see, 1 unit of beta, you can use only 3 kg. In terms of Y, you can use only 4 kg. And you have to buy it for 20 rupees, 1 unit, 1 kg. And it has to be buy at 10 rupees. So these are the target. This 3 kg and 4 kg target or the standard is given to the factory manager, factory supervisor, production manager. This 20 rupees and 10 rupees target is given for the supplier, supply division head, manager supplier, or director supplier, or director supply. So here also you see that the manager has to, production manager has to manage the beta production 1 unit with 2.5 labor hours and grade 2 1 point hours. If he is using, say, instead of 3 kg here 4, and I think usage is little bit more. And if he is using 3 kg here, you see that usage is good. But remember again, mix is now opposite. Earlier you put 3 from here, now you are putting 4 and here 3. So you have just changed the mix. We will discuss the mix variance later on. But what I want to communicate to you is that if you look at the standard cost card itself targets for employees. Cost card itself a controllable unit for employees, factory manager. So in other sense, by using standard costing card, we are trying to discipline our employees. We are trying to control our employees. So standard cost card itself having the power. So you may think that power is always with people. No. For document, a constitution is a powerful document of the country. So thereby documents, minutes, reports, rules, acts are different kind of sources of power. So thereby, by using this standard costing card, factory manager will control his or her factory, his or her factory employees. You got my point? So if there is a variation, may discipline එකට යන්නේ නැත්තම් මොකද වෙන්නේ අපට අහු වෙනවා variance එක. මොකද මෙතන 3යි කියලා තියෙන මෙතන 4යි. So he has consumed more X material. Okay. So I think you can understand the cost card very clearly. Right. Shall we go to the slides where we were? Yes. Now, what we do is we will think about now look at this example. Material standard Lanka PLC product A is as follows: 5 kg here, 4. So standard cost is 20 rupees per 1 unit. Actual production is 1000 units. Actual material cost is 5,500 and actual cost is 3.5. Then very easy for you to understand the variance, 2 variances or the total variance. So you see that if I am calculating, the actual cost, of course, is very clear. Actual cost for material, I can put direct material here. Right? Direct material, I can get the standard cost. I can get the actual cost. Direct material, actual cost. Actual cost. So standard cost is really, sorry, actual cost is this 5,500 multiplied by 350. එතකොට 5500 තුනක් කීයද? 15000යි 16500. නේද? එහෙමනේ. 16500යි. එතකොට 5500න් භාගයක් කියලා කියන්නේ 2750යි. මගේ ඉලක්කම් වැරදි නම් you have tell me. එතකොට මේ ටිකේ ඔක්කොම ගත්තොත් 1.5යි 5යි නේද? 12යි එකක් ඉතිරි 8යි 1යි 9යි 1 19250. That is the actual cost you incurred. මේක අපිට ටක් ගාලා ledger එකට ගියා නම් ගන්න පුළුවන්. Actual cost එක you can buy it, you can calculate it. Then standard cost is little different. You see, you have the cost for one unit 20,000. එතකොට මේක අපිට ගන්න පුළුවන් ආකාර කීපයකට 18 අපි ගන්නේ 18 not for the something else. මේක 20 වලින් වැඩි කරන්න පුළුවන් නේද? එහෙම නැත්නම් 1000 අපිට පුළුවන් මෙහෙම කරන්න. 1000 මොකද කරන්න පුළුවන්? මැටීරියල් වලින් වැඩි කරනවා. එහෙම එතකොට එනවා ගිය මැටීරියල් ගාන. ඒක වැඩි කරනවා 4. එහෙමත් හරිනේ. එතන 5000 kg පාවිච්චි කරලා තියෙනවා. එතන මෙතන එනවා 20000. එතන ඔබට පේනවා ඇති standard cost එක 20,000, you will end up with 19,250. Total cost is කීයද? 750. variance එක. ඒක මොකද්ද? favorable එක. ඇයි favorable වෙලා තියෙන්නේ? අපි 20000ක් expect කරාට 19,250 තමයි ගිහින්. For this, of course, you have two reasons. One is price. Obvious here. 20 වැඩි කරලා තිනවා 3.50ට අරන් තියෙන. එනිසා price variance එකක් තියෙනවා. ඉතින් price variance එකේ එන්නේ කීයද? රුපියල් I'm sorry 1 kg is පොණු kg 4ක මිලනේ 5ක මිලනේ එතන තියෙන්නේ නේ. ඉතින් මේක අපිට ගන්න වෙන්නේ. එතකොට 750ක් අඩුවෙන් අරන් තියෙනවා. එහෙනම් අපිට ඒක favorable standard එකක් වෙන්නේ. නේද? එහෙනම් අපි direct material අපිට ගන්න පුළුවන්. මොකටද? direct material ගන්න පුළුවන්. නේද? මොකද ගන්න අපි? direct material variance එක. How do you get? එහෙනම් අපි මේ 3.750 වැඩි කරන්න ඕන කීයෙන්ද? 1000න්. sorry I'm sorry 3.750 වැඩි කරන්න ඕන. standard material කොච්චර පාවිච්චි කරන්න ඕනද මේකට? standard material අපිට මතකනේ මේ තියෙන standard material 1000 වැඩි කිරීම 5. මම අර කලින් කිව්වේ නේද? එතකොට 5000යි 5000 750න් වැඩි කරාම අපිට පේනවා ඇති 2500ක් එනවා මෙතන what do you call price variance එක 2500. favorable or unfavorable? 2,500 price is low, that is you know favorable. That is favorable. Okay. Then you see that 5,500 4,000 එතකොට එකකට කීය පාවිච්චි කරලා තියෙනවා kg? kg පාවිච්චි කරලා තියෙන 5500ක් 1000කට එහෙනම් 1000න් බෙදලා 10න් බෙදුවම අපිට පේනවා ඇති 5.5යි එකකට පාවිච්චි කරලා තියෙනවා 10 පන්තියේ අංක ගණිතේ 5.5ක් පාවිච්චි කරලා තියෙනවා kg එකකට අපි කීයක් කියලා තියෙනවා ස්ටෑන්ඩඩ් එකේ 5යි එහෙනම් අපිට පේනවා ඇති එතන අපට සිදු වෙනවා කීයද kg 0.5ක loss එකක් තියෙනවා නේද නැත්නම් kg එක යුනිට් එකකට 0.5ක loss එකක් තියෙනවා. ඒතර ඒ අනුව අපට ගණනය කරන්න පුළුවන් what is the usage variance. So if you go to the answer, I explain it very clearly. So I think we have the answer. This is the answer for standard material cost per unit actual production. That is our 20 වැඩි කිරීම 1000. Actual material cost වැඩි කරනවා අපි actual material cost is straightforward given. එතන අපිට පේනවා 20000යි 19200 අතර නිසා 850යි favorable. ඊට පස්සේ ඔබට මතක ඇති 7500 yes 750යි වෙනස material consume කරලා තියෙන 5500ක් standard price එක actual price වැඩි කරනවා actual quantity of material purchase එතන 2750යි 5500 වැඩි කරාම නේද එතකොට අපි ඊළඟට අපි ගත්තොත් එතන unfavorable favorable එකක් තියෙන favorable එකකට හේතුව තමයි ඔබට පේන ඇති මේ supplier ට විශේෂ මිල වාසියක් එන්න පුළුවන් බලාපොරොත්තු නොවන විදිහට සැපීමේ වැඩිවීමක් වෙලා කර්මාන්තයේ මේ අමුද්‍රව්‍ය වල සමහරලාට ඉම්පීරියර් ක්වොලිටි එක ගත්ත නිසා වෙන්න පුළුවන් මේ මිල අඩු වුණේ අපට low material ගත්ත නිසා වෙන්න we don't know we have to investigate සමහරලාට supplier ගේ අලුත් මේ supplier ගේ negotiation skill එක වෙලා වෙන්න පුළුවන් we don't know right එතකොට අපි favorable එකක් වෙන නම් unfavorable එකක් වෙන නම් අපි හොඳ ගුණත්වයෙන් යුක්ත භාණ්ඩ ගත්තා නම් price අඩු කරගන්න බැරුණා නම් කාරණා වලට එනවා then the material usage variance of course as I told you you see that the standard material usage is 5000 මෙතන අපි පාවිච්චි කරලා තියෙන 5500ක් ඒ කියන්නේ 0.5ක් වැඩිපුරක් පාවිච්චි කරලා තියෙන 0.5ක් කියලා කියන්නේ ඇත්තටම කියනවා kg 500ක්. ඒතර 500 ස්ටෑන්ඩඩ් ප්‍රයිස් එකකින් වැඩි කරාම එතන නෝ unfavorable එකක් 2000. ඒතර ඒ ටික දැම්මහම අපිට එනවා material usage variance එක. ඒකට හේතු වෙනවා unfavorable එන්න හේතු තියෙනවා careless handling, inferior quality, poor machines, inexperienced employees, technological issues, etc. මේ පැත්ත දාලා තියෙන හේතු. මේ පැත්ත දාලා තියෙන favorable එකකට ආවම තියෙන කාරණා ටික. Okay. You may calculate this by using in a different way, but so this is another presentation of 750 favorable and 750 favorable and 200 is the. Okay. Then we can calculate the mixed variance, material mixed variance, standard price, actual quantity in standard mixed proportion, actual quantity used. Actual quantity in standard mixed proportion. That is the mixed variance. Mixed variance. Then you got the material yield variance. Material yield variance is standard price. Both formula, you see that you have to focus on standard price. Here you have the standard mix and actually quantity in standard mix proportion. That is the case. Okay. Now, if I am explaining here, it's a new question because earlier question we had on one material. You see material here 3 to 2. That is the standard mix. But actual mix is, you see, different. Actual mix is here 6,200 and 3,850. Actual production in the last week, 2000, actual material costs incurred to production, produced units are as follows. අපට ගන්න පුළුවන් ඕනනම් unit mix එක. If you want, you can take the unit mix. මේක 2000 බෙදුවා නම් හරිනේ. මේක 2000 බෙදුවා නම් හරි. අවශ්‍ය නම් A mix එක ගන්න. නේද? එහෙම ඕන එහෙම ගත හැකි නැත්නම් මේකට ඕන මික්ස් එක අපිට යුනිට්ස් වලින් ගන්න පුළුවන්. මෙතන 3යි නම් නේද? 3යි you produce only 2000. එතකොට මෙතන මික්ස් එක ස්ටෑන්ඩඩ් එකට අනුව 6000 දාන්න ඕන. මෙතන 2යි නම් නේද? මෙතන 2000යිනේ. එතකොට 4000. 6ට 4 අනුපාතය තමයි මික්ස් එක. ස්ටෑන්ඩඩ් මික්ස් එක. ඒතර ඇක්චුවලි ගිහින් තියෙනවා 6200ක් අප. 6200ක් ගිහින් තියෙනවා. මෙතන ගිහින් තියෙනවා 3850. මෙතන අපි බජට් එකේ දුන්නට ඔක්කොම මැටීරියල් මික්ස් එක 10000යි. I'm just analyzing the question. මෙතන ඔක්කොම බිඳුවයි 5යි 10 බිඳුව එකක් ඉතිරි 10යි. 10050යි. Right? එතන මෙතන අර මෙතන 3යි 0.1යි. මෙතන 1යි 9යි 2යි 5යි units වලින් හදුවා මම නිකන් I just did the calculation, but you see that here the total consumption of material P and Q 10,000, here 6,200 and 3,850. Now, so when you look at here is material usage, P is 2,000. You have used 2,200 more. And here 4,000, thereby 150 less. Multiplied by the rate, you can get the usage variance. And if you use the price, here 5, here it is 475. Here 10, here it is 10.4. Right? So what I'm trying to do is just we will look at the calculations, then of course you can understand. Total material cost variance, very clear. Likewise, what shall we do is, will you just next week, can you calculate all these variances, total material variance, price variance, usage variance, mixed variance, yield variance. Use this formula to calculate the yield variance and the mixed variance. Right? Do you have any questions so far? If you not, we will really today we will finish the session, today's session. Okay, thank you very much. We will meet Friday.